The World Bank recently released its report on doing business in Kenya, examining business regulations from the perspective of small and medium domestic enterprises in 4 regulatory areas. We spoke to Peter Ladegard, head of investment climate in the EAC for the World Bank.
There is significant progress in business regulatory reform in Kenya. Since the first report of this kind was published in 2009, we have registered 29 doing business reforms in cities in Nairobi, in Kenya.
What are some of these reforms that are very specific that have led to this improvement in the climate?
The Doing Business Report 2012 for Kenya measures a number of very specific regulatory interventions, such as cost and time related to starting a business, to obtaining a construction permit, and a number of other related areas. So that's not a comprehensive measurement of the entire business regulatory environment, but it is a number of selected interventions.
How long does it take to start a business right now in Kenya? Because the example that everybody gives is Rwanda, which can do it in between 24 to 48 hours.
As a matter of fact, there are great variations in Kenya, and without going into the specific numbers, I can tell you that variations are between in the low range, in the higher range of the 20s to the upper range of the 70s. So you do see a significant variation. And on this specific area that you're mentioning, registering a business, one of the main reasons for significant delays throughout the country is that registration of businesses in Kenya is still only possible in the capital city, Nairobi.
And speaking of registration of business, one of the most improved cities you talk about is the port town of Mombasa, which appears to have done quite well.
That is indeed correct. Mombasa is a high performer in this year's review. It has indeed improved on 3 of the 4 areas measured by this report, and it has done so by a number of dedicated and focused interventions, including, for example, in the area of obtaining a construction permit, where prior to this measurement, if you were a company trying to obtain a permission to open a warehouse, you would go to 5 or 6 different authorities. Currently today, as an entrepreneur, you would only have to deal with 1 authority in the city of Mombasa.
Construction permits are a serious one, and it is one of the metrics you're looking at here. Why is it that those construction permits form a part of the issues you look at?
Oh, that's a very good question. Construction permits is a good proxy for a number of the licenses that any given business would need to obtain to do business. We do fully appreciate that businesses often have to obtain a whole range of licenses, but this particular type of a permit is one which is acquired and needed by a whole range of businesses across the globe. So that is the reason why we have chosen this particular license or this particular permit as a proxy for a broader number of licenses that needs to be obtained.
The average time it takes to start a business right now in Kenya is about 22 days. The cost is also down by 5%. Is there an ideal number for this?
I think it's fair to say that, 2 points on that. I think it's fair to say that if you look globally, there's a significant scope for improvement compared to global or even regional best practice. You pointed out that Rwanda has been doing well, and it indeed has so. And just by looking towards Rwanda, improvements would be possible. But more importantly, if the local authorities, if cities in Kenya just look around to the neighboring cities, there are often quite significant learning points just by learning from your neighbor. Our survey shows that there's not one particular city that is outperforming all the other cities in all regards. There's always another city which is ahead in one or the other indicators. So one of the main points of the report is that although global and regional learning is critically important, learning within Kenya towards getting even better performance on a number of these indicators is certainly possible.
Nigeria's Economic Council approved government's proposal to launch a sovereign wealth fund with an initial $1 billion, ending months of political wrangling. We spoke to Dr. Patterson Ekiocha from the African Institute for Applied Economics.
Following the announcement after the National Economic Council on Monday, following the announcement made by the governor of Rivers State, Right Honorable Chibuike Amechi, the 8 months wrangling and negotiations are over.
So how does this exactly work, especially with the ECA that also exists?
Yeah, you know, the ECA that existed, you know, the governors weren't comfortable with the management of the ECA, and recall that we had close to 20 billion in 2007, which got depleted to 7 billion, shortly. So the governors were skeptical about the efficient and sustainable management of the Sovereign Wealth Fund. But the Sovereign Wealth Fund being an excellent idea whose time has come, considering the vagaries of the international oil prices, as well as the macroeconomic instability, and even considering the political economy of oil production in Nigeria. In fact, it is imperative that we should have the Sovereign Wealth Fund.
The Sovereign Wealth Fund, the initial thinking appears to have been that it should replace the ECA, that excess crude account. The governors seem to think this should run concurrently. Is this usual or unusual?
Yeah, it is usual. Recall that, in fact, it does appear people are losing sight of the provisions of the Fiscal Responsibility Act in Part 7. In fact, Part 7 made provisions that savings should be made and then equally managed, but that particular savings in excess of the prevailing price of the crude that was set by the National Assembly for that year, every excess should go to that particular account, a separate account managed by the central bank. There has been a provision of that. That is what I might even regard as excess crude account. It has been accounted for by the law. But the Sovereign Wealth Fund, has three funds. You have the Future Generation Fund, Nigeria Future Generation Fund. You have the Infrastructural Fund, and then you now have the Stabilization Fund. All in three. These three in one in Nigeria's Sovereign Investment Authority.
There have been some serious...
So the two of them...
Yes, go ahead.
The two of them running concurrently, it's not an aberration. This other one should feed the other, coming to the funding,
sure,
basically. But it does appear that people have lost sight of that provision of the Fiscal Responsibility Act.
Speaking of the funding and fiscal responsibility involved in this, there have been concerns and allegations of financial impropriety, corruption, and the transparency of this is questioned. Will this be addressed?
Yeah, this has already been addressed. I get that the Minister for Finance, Dr. Ngozi Okonjo-Iweala, would have really disallayed the fears, because the people who are supposed to work in the Sovereign Wealth Fund Commission were painstakingly, selected, through means that were very transparent. So these are credible Nigerians, even non-Nigerians that are there. So there's not going to be any issue where anything will happen to the money, or maybe the money will develop wings and fly away. I don't think it's going to happen this time. And the governors, after 8 months of deliberations and negotiations and all that, have come to see, the reality of the day.
What is the progress with those people you talk about, the managing director, the board of directors, and really the oversight committee for this fund?
Well, if I really understood well the proclamation as I read it in the news yesterday by Right Honorable Chibuike Amechi, the governor of Rivers State, the MD and CEO are yet to be recruited, and this will equally be transparently done. These are going to be seasoned Nigerians, seasoned bankers, seasoned investors that will make sure that the spirit and life and objective of this particular Sovereign Wealth Fund, should really be realized.
With the slowdown in China, driven in part by the Eurozone crisis, the South African resources sector has felt the harshness of this effect. But Stanlib head of resources, Sholto Delamo, believes the resources sector makes a compelling long-term investment case. He had this to say.
Generally investing, one is to be a long-term, investor, long-term focused, and a lot more in resources, I would imagine. I think that if you look at where current share prices are, right, of some of these resource companies, they're certainly pricing in significantly lower, commodity prices relative to where, normalized situation would be. So if anything, I would say if anyone probably is looking at the resources space as an initial entry, current share prices are looking quite compelling. I think from a longer term perspective, if you look at what holds as a competitive advantage as far as Africa is concerned, and certainly as far as South Africa is concerned, is probably commodities, and we have a rich endowment of commodities across, a myriad of them, from base metals to, bulk commodities. If you look at South Africa, for example, we've got, about 80% of global reserves in as far as manganese is concerned, and about 70 to 80% in as far as platinum, platinum is concerned. So I mean, we have a competitive advantage in as far as
But what about time frames here? Because when you talk about investing, as you say, from a longer term perspective,
yes.
When are you going to start seeing the patience from looking at that that commodity price coming off really starting to bear fruit? Because China has been disappointing with its growth numbers, and you seem to have more and more skeptics with regards to China growth going forward.
Look, I mean, I think it's well documented and well understood that China is on a growth process in as far as urbanization is concerned, right? Now, that obviously is not just a straight line, and it will have cycles, as there are business cycles in every other business format, right? Now, there is some slowdown right now, but I think remember that China is still probably growing at about 8%, right, which is quite a strong growth rate. And I mean, the story about commodities is not only about China, it is about general emerging markets, right?
That's what I was going to ask
exactly,
you, because is it just about China? Is it just about China growth comes in disappointing investors by 0.01 basis points, and we almost worry about China's growth slowing down? Or there are other emerging markets that are actually quite attractive and will bode well for demand going forward for resources?
Exactly. I mean, I think right now, as you rightly point out, the story is skewed by China, because China is quite a big economy. But there are other emerging markets that are coming through. I mean, India is also coming through, and so are some other Southeast Asian countries. So I mean, it is going to be, and Africa for that matter, right? So it is going to be a very lengthy process. It will have cycles in between, and the long-term investor will look for opportunities where things are pricing in relatively cheap prices. Compared to where you believe normalized prices would be, and you look at those kind of opportunities to take advantage of them.
What about the South African story within all of this? Does South Africa hold true in terms of an emerging market that offers opportunities if you're looking to get exposure to growth going forward in the future? I
think certainly yes, but I think the South Africa story, from where I sit, is what we can do to take advantage of commodity demand globally. Right. If you look at, for example, the previous, what we call a boom cycle, previous boom cycle, up until the global financial crisis, you could argue that there were instances where we perhaps should have done a lot better than we have. That being, for example, our delivery of thermal coal into demanding economies, as well as for example in platinum. I think you might recall that we had a situation in 2008 where we were running short of power. So from an infrastructure perspective, I think there's probably a lot that can be done.
That's all for this edition of Africa This Week. Join us again next week for another roundup of the top stories in Africa.